people in. We're expecting a big group today, so bear with us for just a minute. We'll be getting started in just a couple of seconds here, all right?
Registered broker-dealers. It means we don't give individualized trading advice or recommendations. Trading does have risk, as you know, so paper trade and use caution and practice with these things before you're ever moving into any real money positions. And neither Bill nor I have any trading restrictions. There we go. All right, perfect. Well, welcome, everyone. So great to see you guys here. All right, got a good group today. I love it. All right, so let me do this. You guys have clearly, or I should say, you've likely been watching the markets and seeing what's going on out there. We're moving into the time of day that we typically get a slowdown, right? So let's do this. I'm going to bring in right here. There we go. Should be looking at signal, and I've just got two charts here, a 5-minute chart on the left with the white background, and then a daily chart on the right with their moving averages, as you know. All right, everybody can see that okay? Andrea says, OMG, I'm at work and it's awful. Get me out of here as a trader. All right, let's work on that. Because, have you noticed, are there some opportunities out there in the markets? I think, yes, of course there are. And we've had, it's been a real interesting market lately, hasn't it? A lot of movement, a lot of volatility, and that's where you can make some real money. And, you know, it's funny because I still, to this day, as many years as I have been trading and, you know, trading with options, which the advantage of options, I think, is that you're more flexible. You can make money on markets going up and markets going down. But even to this day, I've been trading since early to mid-90s, and I still have people call me up when they hear that the markets are down really big one day and ask if I'm doing okay. It often kind of makes me laugh, and I've explained so many times how we can make money on something going down, and they just, it's funny, they don't have the interest to learn, so they aren't putting the time in to learn, and yet you guys who know a little bit about this, you know there is a lot of opportunity, even in these crazy, weird markets, right? All right, let's, so let me do this. Looking first, I brought the S&P up. I always like to start with just some kind of a foundation, as you guys know, that gives us a big, kind of a grounding as to what's happening in the markets and where we're at. And when you look at the S&P, we have had a sell-off for the last 2 days. Friday was a great sell-off. In fact, here, I'm going to take the daily chart. You guys know how I love to do this. I'm going to take the daily chart and just zoom in a little bit. This was the setup that we had last week. We had a big bearish candle. We had a lot of volatility there. And then all of a sudden, we get this setup on Friday. We ended up with a really, really nice breakdown in the markets on Friday. Now, what was super tradable about this pattern was that the S&P had retraced two candles, two small candle bodies. That third candle breakdown, you guys know this pattern as what? You guys probably recognize this. This is a falling three, exactly. We have a bearish candle followed by a couple consolidation candles, little retracement right here, and then that breakdown on Friday was a falling three pattern. Now, what Bill and I teach you guys to do is to recognize this, recognize that day, last Thursday, that this was the beginning of what might become a falling three, or I'll call it it's a potential falling three, meaning we've got a big breakdown and we have two consolidation patterns. What we need to see in order to get our trading signals is the S&P breaking down below those retracement candles and that bearish candle body, right in that area. And once that happens, that then becomes a falling three, and that happened on Friday. So Friday was a great setup for a lot of bearish positions out there. And then we had that follow through yesterday. So if you have been trading the markets, watching some of these movements, last week from Thursday we had an excellent setup. Friday completed the falling three. Monday things followed through. Now today, what do we see so far today? Is there a whole lot of clarity? Yeah, Scott says, yuck. There you go. Indecision, Jose. We so far, all pretty much half the trading day, right? Almost. And the S&P has thrown a doji so far on the daily chart. So it means right now, it's right about where we opened on the S&P. And you can see it right here. When you look to the left on the white background chart, you've got the 5-minute chart. The S&P has had some choppiness there. But, in fact, I was just about to text out a chart watch alert about this to point out that, look, we've moved into a consolidation, into that sideways consolidation area. Felt like real early this morning. We had higher lows, we've had lower highs, not a lot going on. This, however, does get exciting for possible trading this afternoon. So what this means is that with this slowness, there isn't a real clear directional signal. People are kind of waiting. You can kind of see it. It feels like maybe everybody's a little bit shell-shocked from the last two sell-off days, and they're kind of waiting to see. You know, the S&P is trading down near some of the previous lows. So they may be waiting. Are the markets going to break that support? Or are they going to move higher? Will the buyers move in? Are the sellers going to move in? It's pretty typical to have days where things slow down and shop around, and you see a little bit of indecision for a bit there. And that's what we're seeing right now, and it could just be nothing more than a small retracement before the movement begins again. So the way we can use this as traders is you can identify the fact that we are in a slowing pattern. And you can see this is pretty identifiable earlier this morning when with the fact that the S&P could not make higher highs or lower lows. So that's a sideways non-directional signal. So you can implement non-directional type trades, or you can wait. And you can wait for the possibility that the markets may break out. And here's one of the things that I wait for that you can practice is a Bollinger Band squeeze play. Because the longer things are sideways, if you guys use the bands, you know, the longer things are sideways, your Bollinger Bands are going to pinch together. And if you'll look here on this left-hand chart, I've got the bands in blue, so we've got our upper band here, our lower band there. You see how they're starting to go almost sideways right here. So what will happen is the longer things are slow and sideways, the more sideways and the tighter those Bollinger Bands will become. And that will give us some clear breakout trades at some point. Now, often it's this very day. You'll have sideways action for a couple of hours. The markets slow down in general around this time anyway, because the European markets are closing. You see lower volume. Things just slow down anyway around this time. And so it's very typical to get these Bollinger Band pinches, these Bollinger Band squeeze setups here around this time of day anyway. Then you add to it the fact that the S&P is already sold off good, two really good strong days. So again, not surprising that things have been a little slow this morning, in fact all day so far. Now we can let the bands pinch together and watch for a breakout. Just to give you an example of what a breakout is, it happened yesterday on the S&P. And here, sometimes it's easier just to back the chart up. Zoom in a little bit. You guys use the replay function on eSignal. You click over here on this little, it's an arrow in a circle. If you click on that, I'll just jump back and I'll show you how this looks. So we had a consolidation yesterday on the S&P, and this happened later in the day. The S&P had been moving down, and we had a little upswing, and then it pushed lower, and you can see at this time of day, see how sideways the Bollinger Bands are? Those blue lines. starts moving sideways, consolidation, there is our breakout. That is the signal as to what direction the markets are more likely to go, and it was so late in the day, gives us a clue as to where they're more likely to go really into the close at that point. Okay, so I've got some questions, and I'll catch up to these questions, and then we'll keep going here. Dre's asking, what kind of stops do you set? Hard stops at a special dollar amount or moving average? You know, one of the things I'll tell you, I often teach, use the reason for getting into the trade, that should be your stop. So if you're getting into the trade because of a bounce around a moving average, use that moving average as your stop. Now you can, some brokers will allow you to put stops at, like as a contingent order at a certain price point at that average, you could do that. Some brokers will want you, if you're trading options, just to calculate the price of the option if the stock hits that point. So depending on who your broker is, you can set your stops, your hard stops with your broker at that level, or you can even just set an alert. So I'm often, if I'm actively trading, I'm often around my computer, and so I like to use the alerts personally, and eSignal's got spectacular alerts where you can set them on the indicators or even a price point for that matter. So in the case of, let's say, this S&P breakout, the reason for even considering moving into a call position, you could trade individual stocks that are moving with the S&P. You also could buy call options on the spiders yesterday on this breakout. So you can have your stop below the upper band, right? The whole reason for doing the trade was the upper Bollinger band. And so that'd be the reason to get into the trade. That could be your stop. All right, let me catch up. What are the little dots on the candles? It's because I clicked on the candlestick chart, so it shows that the candles are highlighted. And I can't change that until I'm done doing this replay function, because wherever I click on the chart, it's going to jump back to that level. But I'll show you in just a minute what happens. Okay. Nice, Brent. Let's see. Brent saying Friday I sold the call spread on the spiders and closed it out today for a profit of $265. That's awesome. Congratulations. I love that. All right, let's see. Dre's saying, how much do you suggest people start in an account after practicing, of course, for a while? Hey, you know, obviously practice, and practice until the point that you see that, you know, that you're seeing progress, you're understanding the patterns, you know how to handle a bullish market, a choppy market, a bearish market. How much you start with all depends on what style of trading you like to do, and that you can figure out in your practice trading. I could just tell you from my own experience, I started with a couple of $1,000s in an account. I know some people that have started with more than that, and I know people that have started with less than that. Right? So I'd really take into consideration what style of trading. If you're doing something that's a, you know, capital-intensive strategy, obviously you're going to have to start with a little bit more. If you're doing something that doesn't take as much cash to trade, obviously you could start even with a little bit less. Really personal preference. And this is what I love about the market. You can fit the market into your lifestyle, right? No matter what, how you want to live your life, what your strategies are, what you prefer, you can fit it into your lifestyle. I know people that, a retired gentleman in particular comes to mind. He lives in California. He gets up at 6 o'clock in the morning. You know, he's ready for market open at 6:30. He trades the first couple of hours, day trades all the time. That's all he does, and then he's done. And he goes out golfing and hits the beach and does whatever he wants the rest of the day. That's what he wants to do. I know other people that have full-time jobs that don't want to be actively watching the markets during the day, but they use other strategies, swing trading or trend trading strategies, where they can set their orders with their broker, research at night, get their orders set, and then go off to work the next day or take care of the kids the next day, you know, whatever it is. And so you've got such flexibility when it comes to trading that I think it's a world that anybody can do. So it gives us a lot of opportunities and really opens us up to a lot of really, really neat potential out there when you consider that you really can adapt it to fit your own personal, your time, your situation. You know, now I can find what I've got little kids, I'm getting ready for school. I find that I could be a pretty active trader for the first hour, hour and a half of the market, and then it just slows down and it's just busy because I'm getting kids ready for school. But that's worked. Where before I had kids, I could trade all day long. That worked, and now that my schedule gets a little jumbled up sometimes, I can still fit my trading into that with things like alerts and whatnot. So to me, this is the best world. Anyway, enough of that. Let me show you this trade. Let me catch up to the questions here, and then I'll keep moving. Let's see, Mike, you were talking about in the S&P heading into a real narrow wedge, or what stock in particular? Maybe you said it earlier. Oh yeah, Drea earlier asked, you never look at Dow Jones or NASDAQ. You can look at them, but they're just more specific to a smaller group of stocks. I like when we're looking at what are the markets doing. The S&P seems to be kind of the big broad-based index that everybody checks out. So that's why the S&P. If you are only trading NASDAQ stocks, I think you look at the S&P and then you look at NASDAQ. You can look at that chart if you'd like. I just find the biggest help with primarily the S&P. And then if you want to go a little bit deeper, you absolutely can. All right, let's see. Oh, Brian earlier had said today short covering. Maybe a little bit, but real true short covering leads to more of a rally. This is just kind of sideways. So there might be some of that, but not with a lot of conviction, that's for sure. All right. Yes, yeah, you have kids? I know, I hardly seem old enough to have children, right? I'm sure that's where you were going. All right. Steven's asking, with the Fed Reserve chairperson speaking Wednesday and Thursday, does that impact your trading over these 2 days? You know what it All right, let's see, I think my audio cut out a bit. But if you guys can hear me now, how's this? All right, I was just saying, answering the question about the Fed chairman speaking, can that affect the markets? And it can, and so what do you do with your trading? If you've got especially shorter positions, it probably makes sense to go in and use some tighter stops on your positions because they can change the market direction. And that could be part of why we see a little bit of a doji today. People just waiting for that, the reaction to what they have to say there coming out of the Fed. You know what? Here's what I want to do. Let me take this off. Let me finish this breakout. I'm going to back this up again to our breakout candle. Let's see, let me do this. There we go. Okay, so here is the beginning of the breakout yesterday, where the S&P started pushing above the upper band. Now you could scroll forward just by 5 minutes. If you had that breakout signal to go in and buy calls on, let's say, the spiders, or use the fact that the S&P was going higher to check out some of your tech stocks or even your Dow stocks to see if they're moving higher, this is your confirmation to feel comfortable buying calls. And if you use that idea that, hey, it broke out above the upper band, and the whole reason for trading bullishly is because of the breakout above the upper band, this gives us a place to buy calls there with stops below the upper Bollinger Band, right? So again, use your reason for getting into the trade, use that as your stop. And I think you'll find that it can help protect some of your gains and really keep your losses, your potential losses, minimized. So here we have this momentum that took place at the end of the day yesterday on that squeeze play. So as we check this out, I'll go all the way to the end of the day. Little retracement. Now this morning, the markets gapped down a little bit and we started selling off, but this is where we moved into our choppy market this morning. So where we made it to a new high, barely, and then it sells off, and we come down, and the S&P couldn't make a new low, so we're dealing with real choppiness. The part that I wanted to focus on with you is the squeeze play breakout that we had yesterday, and look at the big momentum push that led to. I mean, really, that stuff is quite tradable. And if you're an options trader especially, and you are trading something like, let's say, the spiders. I just switched this from the S&P to the spiders. Obviously, it's just a tenth of what you see on the S&P. But if you were trading the spiders, the breakout on the spiders here was around 183.78, and it closed yesterday even at 185, even after a long wick at the top, even holding through a retracement at the end of the day, 185 and change. So that was a $2 move, even just on the spiders, and the spiders are notoriously fairly slow. But the advantage here, if you're an options trader, is the spreads are really narrow, very, very tight spreads, lots of strike prices, a lot you can do. And you guys tell me, can you make money if you're trading something that has moved even just $2? What do you think? Yes, and Scott's bringing up E-minis. Yeah, E-minis. Could absolutely get into that and take the same charting that we teach you here. Take the same chart patterns and apply it to the E-minis. Apply it to, you've got currencies, absolutely, any of that stuff. Anything you can get a chart of, you can actually trade, and it's a matter of finding what fits your lifestyle best. But yeah, of course we know we can make money on a stock that has moved a couple of bucks. All right. Scott. Yes, markets are a little slow, waiting for the Fed, for sure. All right. Oh, let's look at Facebook. Darla's bringing up Facebook. What an awesome pattern this has been. Let's see. Tony, I can see your chat, so if you have a question, let me know. But it's working. It's coming through just fine. All right, so let's check this out. Let's see. Oh, all sorts of questions about some of the fun stocks moving up. LinkedIn. We've got LinkedIn. We've got Facebook. Well, here, let me minimize this because I find that the daily chart is never going to be, or I'm sorry, the daily chart is always going to be our foundation. And if for me to pull up a 5-minute chart and just look at that, it's not as helpful as if I know what's happened on the daily chart. So we'll start with LinkedIn first. LinkedIn announced earnings the other day, and they had a huge gap down, beautiful sell-off on Friday after their earnings were announced as well, even from the opening price. 125 down to around 108 change or so. So a nice sell-off there Friday post-earnings. Yesterday, it really went pretty choppy, and it was interesting because as the markets tanked, LinkedIn actually bounced a little bit. Well, today we're getting that follow-through to the downside. And if you'll notice, just look at this 5-minute. What is different here with LinkedIn than what we had in the overall markets or what we have today? See, up until this point, the markets were choppy, and so was LinkedIn, right? Right here, it has some support, it has some lower highs. It looked like it was going to move into a Bollinger Band pinch. When it changes, that's when we have a signal. And to me, it was this area here, the low from this morning to the low around 108 here. If that is broken, that becomes a change and a signal that we're not going sideways anymore. And look, took a little bit, but it was right here, right there, that LinkedIn sold off enough to close below this candle body area around 108.50. That technically is a bearish entry. It means if you own stock, you want to sell it. If you want to take advantage of the options piece, you buy put options. And that point, 108.50, look at what this stock has done. It has started a downtrending pattern. And if you miss, these are the things that I'll teach all the time. If you miss that early entry, then guess what? You wait for the retracement. Because, yeah, like Scott said, well, too late now. Yeah, a little bit too late right now. But once it broke down around 108.50, we had 2 retracement candles. This bearish engulfing, or it's not fully engulfing, but the fact that it drops below that green candle body, to me, I will call that, equivalent to a bearish engulfing. So I call it kind of a variation on the engulfing. And that can be used to buy put options. Yeah, and exactly, Scott says it's also a little mini falling 3 pattern where you see you've got these bearish breakdowns, a little retracement, absolutely. But below 106.72, that was another place to buy put options on LinkedIn, and look what it did. It then sold up, and it's been going down 4 candles since that last entry. Is this the place to jump in and buy puts right now? Probably not. But is this a stock to keep on your watch list to wait for a retracement? Right, very likely. All right, so let's see. Somebody else brought up Facebook, which has been spectacular. One of my favorite trading patterns just over the last little while. They announced earnings over here. You can see the yellow background. They announced earnings, huge gap up, big upswing, and a strong, strong, strong reversal with a long wick at the top. This screams the stock is changing its tune, right? Traders are changing a little bit here. So right there, that long wick at the top, that was absolutely the time to jump out of a trade like that. And then we have a breakdown. And remember that whole engulfing idea I talked about? Well, back here several days ago, we had a bearish engulfing candle that led to an opportunity to buy puts right there. So we have an opportunity to go in and buy those put options on that sell-off day, and that could get you on the right side of the trade to basically take advantage of the breakdown. That was on the 3rd, so that was last week. Bearish engulfing down several days in a row. We have actually 4 days in a row. Yesterday's gap down, by the way, was a place to tighten stops. And then today, look what it did again. It gapped down again. And you guys remember what I teach. If you look at the 5-minute chart, if you have, let's say you have put options, you know, they make money if the stock goes down, right? So let's say you currently own some put options on Facebook, and they opened this morning looking something like this, with a gap down in your favor, gapping down to some area, just basically the lows that were hit yesterday. Would it not make sense to move your stops closer to this first candle body as a protective measure? Right? So you take your stops, you move them down to the candle body, then if Facebook starts to fill the gap, you are out of your trade. So that would have been an exit out of put options right there. By the way, if you're also selling your put options, could you consider that gap fill trade? That gives us a place to, a lot of times, switch the trade out, sell the put options, and consider jumping over and buying calls on that retracement, right? So some really, really neat opportunities on some of these stocks like this. And Facebook, they not only filled the gap, but then they surged higher. Here you go, you know, for a little bit, we had this nice momentum. But remember, we're in a market today where the overall tone is a little bit more bearish on the S&P. So as I go current here, let me show you a full chart. What we have is that nice, the bullish part of the move that took place this morning. And that first period of trading right here, this big momentum push, all trading signals happen on that second candle in. Selling puts, buying calls, nice big upswing. The uptrend failed over in this area, and shortly after that it moved into a mini version of a Bollinger Band pinch, and it's already resolved itself to the downside with, by the way, look at this, a falling 3 candle pattern right there. All right, let's see. Jose is asking, was yesterday's rally into the close on the S&P a valid sign to exit bearish positions? So you're asking just the fact that we had that upswing yesterday. And I would say it depends on your trading time frame. So if you were real short-term trading and you see that and you have put positions and you see the S&P breaking out of a Bollinger Band pinch, yes, that is an exit. Not at the end of the day, but the Bollinger Band pinch breakout. So you're out. You would have been out yesterday about at the place that the S&P opened this morning. So that would have been a stronger exit. Now, if you're in a longer trending trade and you're willing to sit through a higher retracement, then that's a whole different thing. And then you may have stops closer to the moving averages on the daily chart, right? All right. Hey, John, good to see you here. Catching some of that Facebook breakdown. I love it. Let's see. See, Christine talking about Amazon. We can check out Amazon chart in a minute. Brenda's bringing up IWM. I love that. If you're looking at a big exchange-traded fund, spiders can be great. IWM can be really great. Yeah, talking about exits and things. And the thing is, always remember your reason for getting into the trade. That could be your exit. IWM is trading much like the overall markets. Today was the 3rd day of a downward move at the open, right? So it's long in the day count. So there is that. Just with the day count alone, yesterday and Friday were better bearish entries than this morning just because of the day count. Now, nothing has been resolved yet. To me, this Bollinger Band pinch becomes a great setup for trading in the afternoon. By the way, you guys, and you tell me, I haven't taught an intraday class in a long time other than this free Tuesday class at noon. But because we've had such great trading in the afternoon, I actually just put another class on the schedule. You probably haven't even heard about it yet because I just decided this morning. But I'm going to teach the trade the close class. here, and that's one where I meet with you guys. We practice trade together for the last several hours of the market. So the last 3 hours, we'll meet at 1 o'clock Eastern time, and we'll hang out and practice trade the markets, and we'll watch for these squeeze play breakouts, and I'll show you specifically how to be trading those as we're paper trading together, right, how to trade these different moves. So I haven't done it in months and months, and just, again, with kids, life gets busy, but I put one on the schedule for the 3rd of March. So that's a Thursday afternoon. So if you'll put that down on your calendar, I'll be hanging out there on the 3rd of March with you guys. So check it out. And you can sign up and join me. It's just going to be a great way that we can practice some of these moves. And how do you handle trades if you're already in them? Or if you're not in them, what do we do? Do we have an entry or not? All right. All right. Good. I'm glad you guys are excited about it. Yeah, I'm looking forward to it. That'll be fun. Hey, Jim. I know. Jim, will you be there hanging out with me? All right, so this will be Thursday. So yeah, so Thursday on the 3rd. Let me see, I had a couple more questions. We were going to look at Amazon, right? Okay. So yeah, so looking at Amazon, it's been trading with the markets, right? A lot more bearishly. This has been on our list in the Traders Talks and my Market Insights and whatnot. Amazon has been a really, really good bearish player. Even from back here on that around that 570 area, when it gapped down and completed a little bit of it's not really a falling three, but kind of basically a break below support. So we've had bearish entries there, and I love it. Christine's saying she's been trading positions like that, right? So taking advantage of all of that sell-off and this bearish momentum. You'll notice Amazon has been trending lower, but not around a 10 moving average. This is a 10 exponential moving average on my daily chart. Just for the purpose of this chart right now, I'm going to change it out to a 5. It's been trending closer to a 5 exponential moving average, but you look what happened here yesterday. We had a big gap down, and it's further away from the average than usual, and today as well. So this is where you can adjust your exit. If you are trading a longer trending position and you have a lot of time, you can use a 5 moving average as your stop, because that is the average that has been resistance lately through this entire sell-off all month long. In fact, you'll notice even at the high today, it didn't quite touch the 5, but it came fairly close. If you have options that are starting to expire, let's say, sooner rather than later, then you need to do some things to manage your stops. We've had 2 days so far where Amazon has gapped down and thrown small candle bodies. This is where swing traders, short-term traders who don't have a lot of time on their options, can consider coming in and moving stops closer to the candle body area, right? Taking advantage of the fact that, hey, it is overextended from the 5. I know I may get out a little bit early, but I can always re-enter. And those are the things that you can do when you are running out of time on your options, right? So some things to think about. With the markets going sideways, you can give Amazon a chance to go through a pinch, but if it breaks higher, then you need to get out of those put options if you don't have much time. But today being Tuesday, we just have another 3.5 days left. We got the Fed governor speaking. We'll see what happens there. But it does make sense if you don't have a lot of time on your options to think about tightening stops down. If you do have a lot of time, then you can continue to trend trade with the 10 moving average as your stop, or 5, I'm sorry. And it comes down to, what was your reason for getting into the trade? How much time do you have on your options? And how do the chart patterns look? You put these 3 things together, and it will really clarify for you where your exit needs to be. So these are a lot of the patterns we're going to be practice trading coming up here in the intraday class next, let's see, March 3rd on Thursday. So I'd love to have you guys there. And we've got all sorts of other things going on. Bill and I are actually teaching our 5-day Traders Intensive class in Chicago the week of the 22nd here in February. So in just a couple of weeks, we'll be hanging out with you guys for 5 days, putting all this stuff together live, and I cannot wait for that. But I'll leave this with you. If you guys feel like you're looking at the patterns and you like what I'm showing you here and you're seeing it after the fact, just keep plugging away and practicing with your charting. The more you chart, the more you practice, the more you learn about this, the better you will be at finding the ideal entries and exits. And Bill and I just class, and a lot of you guys were there. We just taught in Phoenix. It was Bill and I, John White. We had 4 days of instruction. All that stuff is being produced in DVD format. In fact, they are almost ready. I know. I think the deadline for mine is coming up tomorrow. I think that they're going to be, not quite tomorrow, not tomorrow, but coming up, Valentine's Day, right? So that's just right around the corner here. So, in fact, Bill is here. I'll bring Bill in next. You can talk to Bill because they had some special pricing on those DVDs. We have offered once in a while the pre-release price because they're still producing those and getting them ready to go. Maybe what you should do when I bring Bill in, twist his arm, see if he will offer the pre-release price as well, because it's a great, for right now before they're produced, it would be kind of nice. Well, like for mine, I think they're going to be done next week, so, or at the end of this week. So there isn't much time left for the pre-release price. So see if you can twist his arm, see if you can get that out of him. But we really have it was a great class there to go through and learn not only about the chart patterns and how to trade, but then strategies from Bill. I mean, it really will take your trading to the next level. It's pretty powerful stuff. The feedback was phenomenal from that class. So see if you can twist Bill's arm and get an extra little deal out of him right now before it's too late. All right, let's see. Make sure I've caught all the questions. All right, yeah, Scott's asking, what do you have the most success with? Swing trading that lasts 3, 4, 5 days, or trend trading a lot longer? You know what, Scott? It depends on the markets. What are the markets doing for us? If we're in a trending market, you're going to be much better with trending trades. If you're in a choppy market, then swing trading. So it absolutely depends on the markets. This is why I start with the S&P first. Yes, Mike, the Phoenix Project. That was I love it. Mike came up with the name for our class after the fact, the Phoenix Project. So yeah, check it out. Yeah, like I said, it was great stuff. The DVDs, Brett, I'm talking about the DVDs from the 4 days of classes that John, Bill, and myself taught in Phoenix. So we did that the first week in January. It was all about just things that we are constantly seeing that traders need to improve on, to get to that next level in their trading. Really, really powerful stuff. Super powerful 4 days of information. And for my part, the first 2-day class is called Trend Setting Trades, the first 2 days of the 4 days, and it was all about really honing your skills at chart reading and knowing where you want to get in and where you want to get out of those trades. And then Bill followed me with another phenomenal class. I'll let him tell you about that. And then John was the next day. And like I said, those DVDs are right now being produced. They're going to be done pretty shortly here. So if you can twist Bill's arm to get a pre-release price, that would be awesome, because by next week, probably it will no longer be pre-release. I will just say that. All right. And the summer school DVDs, those are still available from last summer, absolutely. All right, so there we go. But you know what I'm going to do? I'm going to stop talking right now. I believe Bill is here. So let me pass the mic over to Bill, and let's hear from Bill. He's got a ton of great information to share with us. All right, so thanks for joining us, guys. I so appreciate having you here. And here is Bill.
All righty, ladies and gentlemen, awesome stuff there that Markay's teaching, and appreciate you guys for coming in and spending some time with us. We do this class every single Tuesday at noon. It is 100% free. Gives you an opportunity to get in here during a time when the market is fairly quiet. Gives us an opportunity to get away from what we're normally doing, which is, obviously looking at the charts and doing our stuff on our own. And really just kind of do that there with you guys. This is the time of the market when we start to build out our trading plan for the afternoon session and recover from the morning session, depending on how active that is. And we get a chance to spend some time with some great people. So one of the amazing things about doing this is that trading can become a very solitary experience, especially the better at it you become, right? I mean, if you think about it, if you're really good at this, how many people do you need to have around, right? You really, I mean, you can generate the income that you want when you have the skills that you need. And for that reason, a lot of people become very isolated in the trading community. And we just love the opportunity to get out, spend some time with you guys, talk about what we're seeing in the markets, talk about some of the experiences that we've had. And as Markay was talking, I was looking at a couple of trade setups that she teaches that we actually practice in my morning lab. The morning lab, we get together every single day, 4 days a week, for a couple hours in the morning, and we actually execute the skills, if you will, that we learn in classes like Markay's class that she's got coming up. And this market has certainly changed dramatically over the last few weeks, would you not agree? DC Jim wants to know if I'm on the plane to LA. No, but I am going to be there soon, all right, teaching a live event. And yeah, the market has changed a lot, guys, and as a result, we've got to change how we look at the markets and how we trade the markets. And so, you know, we see these big sell-offs, we see these massive moves in the market that occur literally in just a course of a few days. We'll see these big sell-offs. The last 2 days in the S&P, as an example, we've moved from an opening price of near 1913 down to where we are right now, which is 1845. I mean, you know, you're talking about moves that are in the area of 50 to 100 points in just a couple of days on the S&P, and they've all been downside moves, and that has created some tremendous volatility, which as a short-term technical options trader is where we make our bread and butter. That is where the money gets made. That is where we get opportunities to trade. And I'm going to throw an example up here. I want to make absolutely certain everybody understands that everything that we talk about in these classes is for educational purposes, that what we're doing is teaching. And for that reason, all of our trades that we do in front of the group here are paper trades, they're practice trades. But just to give you an example of what these kinds of sell-offs can generate. So this sell-off right here in the S&P, there was a nice big sell-off right in here. Went on just as expected, 3 days, 1 day retracement, and then continued for another 3 days with a 2 day retracement, and then continued again. Those sell-offs, guys, that kind of movement, that kind of momentum is what we have to have as traders in the market. We trade that in the morning lab. We trade those kinds of things in our paper trading account to practice with, and we end up with results like this. Okay, this was a 1 week of trading that we had in the morning lab, some pretty big positions. You can see Priceline, Amazon, Netflix, Facebook, Apple, all represented there, and those are stocks that Markay was just talking about. Now understand those are all paper trades, right? Those are all done on the eSignal platform, but some huge, huge numbers in there, all of them paper trades. There you go right there. You can see it all. And that's the beauty of what we do. Look, we had one that did not work out as well. Actually, it was a hedge against another position, so it did work out. My point is this. The trading is there, right? The money is there if you know how to go out and find it. If you know what you're looking for, it's there. You've just got to learn the skills. And when I show results like that, I've got to ask the question, why in the world would you not want to learn how to do that? Right? Does anybody have an answer to that question? Ram asking a question, who is my broker? Ram, we've got a couple different brokers that we work with. I do most of my own trading is done through a broker called Interactive Brokers, and that does hook up into the eSignal platform, which is really nice for me when I'm on the road. I get out on the road and I actually am trading through the eSignal platform, and it's plugged right into my Interactive Brokers brokerage account. So if I'm doing funded trades on my own, right, I never do those in front of the room because I'm not here to tell you what to fish, right? I'm here to teach you how to fish. And so that's who I do most of my trading through. So again, you know, let me just go back to the question. Why would you not want to learn to do that? Anyone? No one? No one has? Here, maybe you're not understanding what I'm putting them. That's $113,400 of paper trading profit in a few days. 103,000, 88,000, 64,000. Are y'all getting the point? I mean, I got to ask the question, if you could do one of those, right, would that be okay? Now, understand, those are paper trades. Darlo says I'd rather go to work. I think there might have been a little sarcasm in that, right? Kathy says you have to be brain dead. Yeah, now here's the thing. Is that going to happen like 2 weeks after you start learning to trade? No, you're going to have to invest in an education. You're going to have to learn to do this stuff. Ram says, very new to options and stock trading. Sorry to ask questions. No, Ram, by all means, never ever apologize to me for asking a question. It is what we do. We specialize in providing information and education to traders. That's what we're here for. You ask any question that you want. Here's the thing. I'm pretty good at what I do, but I can't read your mind, so if you don't ask it, I can't answer it. Does that sound good? Do we look at stock charts when placing trades in options? Because option chart look weird for the same symbol. It very much does. In fact, what Ram's talking about, guys, just as an example here, one stock that I'm watching here, as we get a little bit of a breakdown here in the S, I'm watching what Markay taught. I am, and let me just, I know we got a lot of new people in here. I am a product of the product. And by that, what I mean is I came to BetterTrades as a student, just like many of you. One of my very first mentors, and has been for almost a decade now, was Markay Latimer. And so when I say I'm a product of the product, I learned to read the charts from her. There is nobody in America today, and believe me, I go out, I check, I go to the other workshops, I know who the other instructors are. Sometimes I have to wear a disguise, but I do. And there's nobody in the country that teaches technical analysis better than Markay Latimer, right? So if I go in here, Ram, and I look at a chart of Netflix, okay, now there's some very specific reasons as an option trader I'm looking at Netflix, and one of them Markay just taught you. Right, we've got a really awesome pattern here on Netflix. Been waiting for a while. The stock has been really extended off its moving averages, had great sell-offs, and then for 2 days it retraces. And what has it not been able to do today? Has not been able to get above that 5 moving average. Has not. I mean, it got up there for a minute, and then it just broke right back down. So now I'm watching this, and I'm thinking to myself, you know what? If this stock starts to break down and these Bollinger Bands start to spread, I learned a long, long time ago at a live workshop that Markay Latimer did, and it was videotaped, and it was an awesome workshop, very similar to the one that she did in Phoenix, although the one she did in Phoenix, I'm just going to have to say, took it to a whole nother level. Okay, so that workshop, I learned some stuff there that I've been using. In fact, I'll show you one of them that I learned there if we got time. But just to show you an example of, I learned a long time ago that if we start to break out of this Bollinger Band squeeze play here, which is what Markay called it, that there may be an opportunity for us to profit if this stock goes down. So, Ram, what I would do there is I would go into my options page, and I'm going to look at a chart of Netflix right here. All right, so I got a chart of Netflix right there. There's that 5-minute chart. Looks familiar. Now I'm going to go in and I'm going to look at the option, right? So I'm going to start going through and I'm going to start picking out the option that I want to select. For a trade like this, I could go to the 185. I'm sorry, to the 85 put strike right at $2. Meets one of our criteria. We could go with a higher delta option if we think we're going to be in there for a shorter period of time. But let's just select this one for now, $1.95. Now there are some similarities between these two charts. There's the option chart right here. And we've got the stock chart over here, so option chart here and stock over here. And so there's some similarities, but that's not always going to be the case, right? There are differences. So which one do we need to be watching? What I'm going to tell you is this, Ram, we always trade off of the chart of the stock, right? We're trading a derivative of a stock. We're trading an option. But our buy and sell signals are going to come from the stock chart. We're simply using the option, the derivative, as a substitute for the stock. Okay? So we're going to go in and we're going to look for an option. Now, I don't have my signal yet, right, because I learned a long time ago. There's certain criteria I'm looking for. But this is one that I'm definitely watching. Does that make sense to everybody? Scott says, do you ever trade leaps? Are they too pricey, too much time? What's your opinion on leaps? Scott, I love them, right? In fact, I just finished, you heard Markay say, we did 4 days of training in Phoenix for a great group of trading and students, and I taught a class called Calendar Cash Flow, right? We recorded it. It's also on DVD. It was a 1-day class, and I show you how to use leap options to generate massive passive income by creating opportunities to sell calendar spreads against the long-dated position. And I go through an extensive analysis of the criteria that you would need to see to be able to do exactly that, to sell those call options against the calendar spread and create that passive income in your account. So yes, I do like the leap options, and Mike says, can't wait to get that DVD set. In fact, Markay mentioned some special pricing on that, right? Ram says, awesome, that's the answer I was looking for. Believe it or not, I asked a simple question to many trainers, and no one gives me the straight answer. Ram, one thing you'll always get from me is a straight answer, all right? You may not always like it, but you'll always get the straight answer. You know, there's nothing to hide here. I do this, understand, I do this every single day. We trade these things every single day in front of literally hundreds of eyeballs, and there's nothing hidden. You get to see it all, the good, the bad, the ugly, the blood, the gore, the guts, and the glory whenever we trade in the morning lab. And one of the things we do here at BetterTrades is we try to make sure that we keep it real, right? This is going to be worth it. It's not going to be easy, and it's probably not going to be cheap, but it is worth it. Does that make sense? Scott says, what about a leap on XLE with the price of oil? So the XLE, which, Scott, look at this. I actually happen to have it right down here, all right? This is the energy ETF, okay? And the idea is if we buy ourselves a call option, eventually the price of oil will go up and we'll make money on it, right? All right? So let me ask you a question. How would that have worked here? It kind of went up a little bit, but then didn't. All right, well, what about here? I mean, obviously it was a double bottom. It went up a little bit, but then what did it do? Right? Are we at a bottom in oil is the question. Let me ask it a different way, and this goes to what Ram was talking about. Do we look at the price of the chart, or do we look at the price of the option chart, or do we just sort of wing it and throw our money against the wall and see what's going to stick? No, we're technical traders. We're going to trade off of the technicals. So y'all tell me, what about this chart is so bullish that it would compel you to bet it's going to move up? Nothing. Nothing. There's nothing here that tells me that this is going to go up. Is oil eventually going to go up? Yeah, I guess eventually it's going to have to, right? When? Well, I don't know, but I'll tell you this. Oil, as evidenced in the XLE, has been trending lower since July, and that's not July of 2015. That's July of 2014. So there's a year right there, and here's another half of a year here. For a year and a half, you buy a call option right now, and that continues to go sideways or down for the next 6 months, you're losing money on that. Guys, learn to read the charts. Learn to read the chart. Don't just guess for the sake of guessing. All right, does that make sense? Ram says all the moving averages are heading down. Exactly, sir. There you go. All right. Jose says better to give that money to charity. Guys, check this out because I've only got a couple minutes with you guys, and I am seriously getting ready to fly out to Los Angeles doing one of our brand name Next Step workshops, right? One of our flagship, that was the word I was looking for, flagship workshops, Next Step workshop in Los Angeles, California on Wednesday and Thursday of this week. So going out to do that. The one I wanted to show you guys, which was just such a cool trade, and those of you that were in the lab this morning, you kind of saw the setup on this. I didn't really think about it until we kind of got into it a little bit, but this sets up perfectly for a trade that Markay talks about and talked about in Phoenix. Let's take a look at the intraday chart, right? Well, let's take a look at the daily chart first. Daily chart, all right. What direction has Tesla, this is Tesla, what direction has it been trending? I'll give you all a minute. Don't take too long. Okay, one of you's got it. It's down. It's been going down. It's trending lower. Stock gaps down this morning, and then it just rips higher, right? 1, 2, 3, 4, 5 candlesticks, and I made mention this morning, and I didn't follow through on it. I wish that I had. But let's do this. The replay function in eSignal, we'll go back. We use this a lot in the morning lab. We use this a lot in all of our teaching because it's such a great function. It allows us to go in and play these candlesticks back. And so right here, the stock has gone up 1, 2, 3, 4, 5 candlesticks, and it's a bearish stock. The daily chart is bearish. So at this point, the direction the stock is wanting to go, the momentum is to the downside. The stock for 5 candlesticks rallies hard $20. Stock has been in a bear. This was a little bit of maybe a short squeeze. People are coming in, oh my God, I got to buy a stock, got to cover my position, got to get out, I got to take profit, blah, blah, blah. And the stock rallies for 5 candlesticks. Okay. This was such an awesome setup for one of the trades that Markay teaches, which is a counter trend intraday Bollinger Band play where you're going into the squeeze. And so by buying put options either on this candlestick or look, if we play it forward, the next candlestick, I talked about it there, we can play this as a counter trend move back into what is likely to be a Bollinger Band squeeze. We saw it happen yesterday afternoon, did we not? Stock went into a Bollinger Band squeeze. Happens every single day. Well, when stocks move into that, if they've had a big move first thing in the morning, they tend to have a counter trend move against it. Buying put options here gave you an opportunity for this. So if you look at the move here, it doesn't look like it was a whole lot. It doesn't look like it was all that exciting. Yeah, okay, Bill, I mean, it's just a few candlesticks there, right? Well, let's take a look at where we're at right now and what this would have done for you. Okay, there's your exit right there. Maybe. Nope. Yeah, right there. So here's your exit right here, right around 150 bucks. Your entry right in here about 156. There's a $6 move there. Right? So guys, I mean, the trades are out there. The opportunities are out there. You've got to learn to take advantage of these things. That's a very nuanced kind of a trade, a very advanced kind of a trade, one that a lot of people would never see. So there are other entries that you can look for there, but I just want to show you one example of that. Guys, we have, Markay told you about our intraday class. Get into that class. Here's how you do it. You go to BetterTrades.com. And Ram, and those of you who are in here as brand new, never been exposed to BetterTrades before kind of students, let me invite you guys over to BetterTrades.com. Get in here, kick around, check it out. We offer a lot of free resources here. There's a free blog, great information there, a free version of our dedicated trader website where you can find candidates and research. Stock Market Outlook, it's a great place to go every single morning. You can find information there. Get yourself registered, because once you're registered, now you can come in and you can see some of the classes that we've got coming up. For example, Markay's class, right? And we talked about, there's some e-signal classes on there. Those are pretty cool. So you've got classes in here. There's premium classes. There's some online classes in here. And there's the Morning Lab. There's Markay's Trader Talk. There's the next steps that I was talking about. Trade the close with the pros. There it is right there. Right? So you go to BetterTrades.com. and you click on classes. There's Trade the Close with the Pros, and that would be Markay's class right there. Awesome class that she's got going on there. There is a class in here as well that that I'm doing because the market has changed so much. I've got an online class coming up for 129 bucks. That is a 2-hour live online class called, well, here's the name I came up with. Y'all tell me if you like this, all right? It's called Battling the Bear, right? I don't know, I could change it if you don't like it, but y'all let me know. Battling the Bear, if that's something that you like, you go onto the Better Trades website. It's there. If you don't find it, just give us a call. We'll give you a special pricing on it, okay? Demetrius, he says, we got a scheduling conflict. Can't go to Markay's class and the Houston Next Step. There's a schedule conflict there. Man, what are we going to do? Demetrius, do you think that maybe, possibly, we'll work it out? We'll get you there. We'll get you taken care of. All right? I'll give you a pass. How's that sound? Get in there. We'll get you taken care of. Come to Houston. You're going to learn a lot there. Come into Markay's class, going to learn a lot there as well, right? All right, so the couple things that we got going on there, as Markay said, I know there's a bunch of people in here that have gone to our 5-day trader intensive. We got one coming up at the end of the month in Chicago at the floor of the Chicago Board of Options Exchange. We got market makers that are going to be coming in. We're going to be there for 5 straight days. If you have previously taken the 5-day traders intensive, and you are interested in special pricing, give us a call. Okay, come and see me and Markay and I, and we're going to trade with you for 5 straight days. Those of you that have, you know what an awesome event that is. 5 straight days right there. We're with you. You get to see the entries, the exits, the stops, how the trade is managed through the week, the hedges, how we go through and select and identify candidates and then qualify those candidates and then execute the trades and then manage the trade for 5 days. John, you're on my list. All right, you and I have we're going to be talking over coffee. So there you go. All right, so no, John, Mike, we're not going to call the class Eating the Bear. All right, we're going to call it Battling the Bear. They both start with B. That's how that works out. So again, guys, just to help you guys out, for those of you that are a little bit confused on how do I get there, you just go to BetterTrades.com right here, right? Go there, sign up, right? And you're going to get access to a ton of great free information, guys, the blog, Dedicated Trader, Stock Market Outlook, and then you'll also be able to go in and sign up for our classes. Bare necessities. Kevin, you just won the internet for today. Bare necessities. All right, well, fine. We'll change the name of the class. That's really good. Bare necessities. Now, that's pretty funny. I think because of the new Jungle Book, right? And we've got the Super Summit coming up, right? And and talking to John there. Battling bears in the market or the zoo. So, guys, that's where you're going to go for your classes again. You're looking for the premium classes, right? And that's going to be, you just scroll down there, and there's the premium classes. There's Markay's class right there. All right, so, guys, that's what we've got for you guys. Again, we normally jump in here. We spend about an hour with you guys and talk about the markets, talk about what's going on in the markets. It's been an awesome market to trade. I mean, it really has just been a phenomenal market to trade. We have generated more paper trading profit, and again, understand they're paper trades, but it's the same skill level to execute a paper trade as it is a real trade. And it's not like we tell you, you woulda, coulda, shoulda. You actually get to see the trades as they're being done. You can do them in your own paper trading account, so you're learning the process. But this first 2 months of 2016, we have generated more profit those first 2 months than we have in some years. All right, so just astonishing. We've had several $100,000 plus weeks in 2016 already. So really exciting stuff in there. And again, paper trades. Netflix starting. There it is. All right, so it's kind of stalling here. There's Netflix. All right, so. Anybody remember what we were talking about? You guys want to do one? Kind of a low volume breakdown. I'm a little cautious here on this. So what do I do if I'm a little cautious? What if I'm looking for both of those Bollinger Bands to spread apart from each other? The lower one's starting to go, but the upper one's not going yet, which tells me that on low volume we may not be, getting exactly the move that we want. And so scale in, Brenda says. Exactly. What would be wrong with going in with a smaller position? All right, maybe we just start out with one strike out of money and we buy a few contracts, right? Rather than buying, normally we go in with, you can see the default on my options order ticket in each signal, but here we're going to go in with a smaller position, and maybe we just go in with 5 contracts. Let's just start out with a very small position. We can always build into it. For those of you that have eSignal but don't have the BetterTrades version of eSignal, you may not have things like the option chain set up this way. We have a lot of different pages that we make available to our students. All of the coaches got together and put together, kind of their trading setups, what it is that they trade, how they trade it. Their pages and workspaces are all put together. So there you go. Now we got the volume picking up on Netflix. So now I can go in here and say, okay, now I'm getting big volume. It's confirming the move. I can come in and I can add to the position. One of the things that's great about being an options trader is that I can add to a position, and it doesn't have to be the same strike price, right? Because I'm exposed on the underlying asset, the same number of or growing number of contracts in that case. So back to what I was saying earlier, you may not have the type of setups that you're seeing with us here. If you're coming over from eSignal here, you've got eSignal, but you don't have the page layouts. If that's something that you're interested in, what we would do is we get you started as a BetterTrades student, and then we make all of those available to our students. Okay. Nice. Victor says up $250 in the last 3 minutes on that Netflix trade. Love it. Love it. Love it. Love it. All right. Let's see. The advanced DVD. So Joseph, Beth, a couple of other people. Brenda, I'm looking for it. A couple of other people are asking about pricing. So here's the those of you that stuck around after 12, right, you're going to get rewarded here. So let me do it this way. Because I don't even have literally, Markay said twist his arm, and I'm over there like with a pen and paper. I'm like, well, crap. Now I got to come up with some pre-release pricing, right? So I had to dig up some notes. So the DVDs from the Phoenix Project, which I just love that name. Okay, and the DVDs were Markay's DVDs on trend-setting trades. Great 2-day class that Markay did. Trend-setting trades. It was an awesome class. And that DVD, when we put that out, guys, that DVD right there is going to retail at over, well, it's going to retail at $29.95, okay, $2,995, but that's, you guys are in here, so here's the pricing that you're going to get. For Markay's pre-release pricing, and this is this week only because the release on this comes out here next week, right? Valentine's Day. Calendar, cash flow. You want to learn how to make passive income? All right, this is my DVD set. That is $9.95. Okay. And this one is going to, we're going to put this one out. It's going to be a $19.95 retail price on this. So $9.95 is what you guys are getting if you buy it pre-release. And like I said, this is going to be for today only. And then John's Spreading Out, which is a awesome set on a one-day class that John did on trading non-directional or less directional trades, such as the iron condors. John is, he's the best. I mean, just absolutely the best at teaching these complex spread strategies with mitigated risk. The hedging techniques that John uses are fascinating to see and well worth the investment. So there you go. There's the pre-release pricing. All right. So this is pre-release, like they're being released. Markay's come out Valentine's Day. All right, and I saw the pre-release version. Right. So there you go. Some people have asked me. A couple people asking all three. Let me give you a call on that, Brenda. All three of these guys, I'll let you know what's going on there. All three of these together, if you decide you want to, okay, all three of them, geez, three of them, if you bought all three of them, that'd be what, 2 through 36.90. Is that right? All right, well, buy all three of them. Here's the price I'm being told. There you go. That's for all three, so you're saving $600 there. But you got to get that as a pre-release price. Okay. Kevin says, "Teach Forex, teach Forex." Okay. We'll teach. We taught it before. We'll do it again if you want to learn it. Brian says, "What Netflix put option did you buy? The one that's making the most money." Right. Let's go ahead and take a look at that real quick. Y'all are killing me. You're going to make me late for my flight. You know that, right? I bought the 85 put and the 85 50s. Okay, two different strike prices there. And, why? Because we've been watching it. Why were we watching it? Because Markay was teaching you right there. She was showing you how and why to do this. So you take a look at this stuff and you follow along with it, and you start to find yourself in a place where these things start making sense, where these option trades work for you. And again, the beauty of it, guys, was we were buying options for, a couple $1,000s to control 1,000 shares of the stock. Very low cost investment there. Okay. Joseph says, thank you for the pricing info. Absolutely. And Victor says, got out of half my position, $500, and continuing with the money management strategy. Well done there. So it looks like a pretty nice move going on there, guys. Keep an eye on it. The S&P is breaking down here, of course, because I'm about to go get on an airplane, and I'm going to miss out on all this awesome trading that's going to go on this afternoon. Those of you in LA, I look forward to seeing you in just a few hours, literally. And the rest of you guys, we will talk to you guys on Thursday morning in the Morning Lab. Those of you who are in here as our special guests, we extend our heartfelt gratitude to you for spending some time with us. Look forward to you doing more and more of that with BetterTrades. Again, BetterTrades.com. Go check it out. We've got some specials for you guys there and a ton of free information for you to go check it out. Appreciate each and every one of you. Looking forward to seeing some of you here in the next few hours. And until we meet again, I wish you all the success in the world. Godspeed, God bless, and we'll talk to all of you again in the very near future.